Hello, welcome to Velvet City. In this lesson, we're going to be talking about CRT model plus ICT concept, and this is going to make sense to you because it's going to change your trading game. So let's get started. Okay, so we are hunting for this kind of setup. This is the bullish scenario and this is the bearish scenario. So I will start from here and then explain. Okay, so first you have a bar right here. It can be a bullish or a bearish bar based on the situation. I'm going to hop into chart and show you real examples. Okay, so after that, after you have this reference candle or reference bar, you want to see a rejection to the downside, which means price is going to wick through it, and then the body will not close below the low of the reference candle or reference bar. Just like ICT said, the wicks do the damage, right? The body tells the story. So the body is not meant to close below this low, it's just meant to wick through and then reject. Then you now see a continuation towards the upside. Now this, we had 4 bars here for this bullish example. On the bearish we had 3 bars. Yes, on the bullish you can still just have one expansion bar to the upside. You can have multiple. That's what I'm trying to explain. So here we'll have a reference bar. This is the high and this is the low. What happens? Price wicks through and rejects. It doesn't close above this high. Then the distribution candle goes down. So you enter on this third candle or the third bar. You understand? So this the entry might form after above the reference candle high. That is not a problem. Unlike here, it didn't form below the reference candle low. It's not a challenge. So I'm going to show you examples. We are going to explain and have a better idea of what I just explained now and everything, or what I talked about right now. So let me give you the rules first, because let's talk about the rules. Now the first thing is mark higher time frame PDRs such as FVGs, fairly gaps, and swing highs and swing lows. Now identify the present market trend. After that, you wait for the rejection on the second bar, then enter on the third bar. So we are going to open card right now. So I want you to take a look at this. Exactly, take a look at these charts, and then we are going to do this together. Now just before I continue, please, in this year 2025 we are running a series for on our platform, a super trading plan for the year 2025. So if you have not gone through that series, participate. The series is still on, and I've not dropped a video for some time, I think over a week now, or just a week, because I wanted it to form in a real life scenario so that I can show you. I don't want to use hindsight or past data, but what I'm trying to say in essence is that the series is still on. We keep uploading and giving you information, but I just want to give you something you can work with for the meantime. That's one. On the other hand, this video is basically for educational purpose. I am not asking you to go and put in live fund or real money into this. Practice over time with confidence. You can know when you want to put in real money. I'm not a financial advisor, so I can't tell you about that. So having said that, I want you to look at this particular candle. Now take notes. This setup forms in virtually all the higher time frames, so monthly, not just virtually all of them, monthly, weekly, daily, and 4 hours. Remember I told you in this year's series when I was talking about the higher time frame that we don't go below the 4 hour. If you're talking about higher time frame analysis, the least you should go below is the 4 hour. You understand? It is clear. It has a whole lot of things that can make price action make sense to you. So this is our reference bar. Now what do we do once we identify our reference bar? We mark out the high. Okay, I think I'm having some network issue, but that's not a problem. So once we mark out the high, we also mark out the low. After we mark out the low, we now wait for a rejection. Okay, so just a moment. Okay, let me go back to the rules again. So identify the present market trend. Yes, we're going to do that. I have a chart where I marked out everything. So okay, back to this. So this is our reference candle high. Now this is the low. Let's mark the low and see. This is our reference candle. What happened? Price wicks through it and does not close below the low, rejects. If you know the lesson on open, high, low, close, can check for beginners lessons. I talked about open, high, low, close. So the body did not close below it, but just wicks through and rejects. Now what happens? On this third candle, we saw price expanding towards the upside, and it took about 1, 2, 3, 4. So like I said, it's not every time you're going to take 2 or 3 or just one candle to expand. It can take more than that. So you see what's happened here. So that is it. Okay, so let me look for another example and give us. Okay, or let's just go straight into this place. So where I have marked virtually everything you need. So I'll just give you about 2 or 3 examples. This is the one I just talked about right now. So right here, look at this. So on the bigger perspective, let's see. So remember the rules. The rule says what? First thing is mark higher time frame PD arrays such as Beverly Gap, swing highs, and swing lows. So on this pair, I've marked that my higher time frame PD arrays such as this. This is a daily fair value gap, and this is a monthly fair value gap, this green one here. So because at those points you want to see price react, so they will have a strong force in price action. This is because price trade to PD arrays and price also trades from PD arrays, which means these PD arrays are like forces dragging price, and they also act as forces pushing price. So you understand? So they drag price and they also push price. So that is why price just simply moves from one PD array to the other. So right here we can see that okay, we are actually bullish here, but all of a sudden we broke down. Now we are bearish. So what I'm trying to say in essence is that now we have the trend that's bearish. We are looking for bearish CRT models, not looking for bullish. So bullish, for a bullish model, you don't want to hold the trade for long. That is counter trading. So you might want to take a profit at 50% of the reference bar range. So let me go to this. Let me show you what I mean. So this is for the bullish setup. So just use your fib, mark from the high to the low. So when you are counter trade, you want to take a profit at the 50%. You understand? 50% is ideal, or 75%. Don't hold it up to this point. 50% is just perfect for counter trading. So here, going back to this, at this very point, when we know that the trend has been bearish from our analysis, okay, I've talked about that a whole lot of time on the previous videos, how to just know the trend. Looking at it, you see that yes, we are having bullish bars, but the bearish bars are more dominant and we'll have more of them. So it's one of the ways to simply know that we are in a bearish market tone. So look at this. Now look at this reference bar here. Price goes up, rejects, but does not take the low. That's another thing. You don't want to see price take the low, so it stops. Then this one distributes. Now this is counter trading because we are going bullish while the narrative is saying bearish. Counter trading is a low probability. Now when we talk about low probability situation, it doesn't mean you cannot make profit, but it simply means that the chances of you making profit in those conditions are very slim, in the sense that you have maybe, let's say, 20% chances of making profit. That's still possible. So in 10 trades you can win 2, but we'll look at for high probability setup, so that such that is about 90 or 80% chances of winning, so that out of 10 you can win 8. So that's what I'm trying to say. So here in this situation, you want to take a profit at just the mid of this range. Don't want to hold it up to this point. No, that wouldn't make sense. So at this very point, price takes the low of the reference bar, we target the high. But remember, I told this is counter trading, let's look at for more examples. Now this is not an indicator. I actually mark these things myself. I mark them myself. I believe you can see the wick because my wick are dark. So from this point now, you see under counter trading, what happened? Price came here, look at the reference candle, took the low and then expands on the upside. So okay, I will break down to lower time frame. I have one more example, so I might just show you this one. So I will break down to lower time frame so that I can see this one. So let me go to the 5 minute chart because I'm working with 4 hours. Okay, while we are getting ready, I will show you this setup. It formed on good on the daily, and I'm taking this trade on my challenge account. Okay, it also formed on NZD and I'm on this trade. This is a demo trade, so this is a demo trade on trading view, the paper trading. Yeah, so here to look at it, this is where this is our reference bar, price rejects and then to the downside. So I'm going to the 5 minute chart. I've already marked it out. So on the 5 minute chart, look at what it looks like. This is the reference bar, price rejects. So you want to look at this rejection from the higher time frame perspective, that's the 4 hour, not from the 5 minutes. So we transpose to 5 minutes basically for entry, and then on this third bar, this is where we enter. I don't want to go into entry right now because this video is going to take longer time than I intend. So check out for the next video or anticipate. I'm going to post an ideal entry technique which is going to serve for both this model and our 2025 scheme, 25 mentorship, because I know in the 2025 mentorship I don't talk about entry technique, but I've been talking about the point where you need to enter. So there are some things you need to see in price, some confirmations you need to see before you to enter a trade. So this is it here. Okay, let's go. I don't know if so. Look at this. So look at what it looks like on the lower time frame. This is the reference bar, price takes the low and then price go up, but this one doesn't give you an entry. I know it will not be clear to you now because I've not explained the entry. This one doesn't give you an entry, but that's fine. Now this one is this one. Look at the first and look at the reference bar, price takes below and then from the third bar it expands up. Same thing happens here. This is the reference bar, price takes above and then down. So that is it. So let's check out for this on good, like I said, examples, so you can work with this. Now remember the rules, you have to work with them. So identify the market trend. So the market trend is what tells you if we are looking for a bearish or bullish CRT. So if we are in a bearish situation, we're looking for a bearish CRT model. If we are bullish, we are looking for a bullish CRT model. So if you see a bullish CRT model in a bearish trend or bearish market condition, that doesn't mean you cannot take the trade, but that means it's low probability. And if you want to take such trade, you target just 50% and not hold it. So this model, like I said, does not form only on 4 hour time frame. It forms on what, but daily and what is it called, weekly, monthly. So this is it. This is the low of my reference bar. This is my reference bar. This is the high. So what's this? If you look at good, you see that we've been bullish. So we are in a bullish trend. We are in a bullish trend. Price has taken all these highs, breaking structure. We are now in a bullish trend. So because we are in a bullish trend, I am looking for a bullish CRT, and this is a bullish CRT. So this is my reference bar, price takes low and then entered on this third candle, targeting this expansion. So I took this trade on my challenge account, but this one is the one I want you to see. I took this one. This one is on a weekly chart. On a weekly chart, this is my reference. Now remember, this price has been, what is it called, bearish. So we're looking for a bearish CRT, but then I have some other analysis I did, and I want to see price take this place before going down. So what's that? This is the reference bar. Price takes low, right? Reject. So when you enter here, now look at how, I don't know if this is clear. Let me reduce the opacity of this line. Okay, now look at the wick here. The wick above here on this particular bar goes up but does not take this high. Whenever I take this high, I consider that invalid. You understand? So the wick just goes up, then comes down. So when I enter in this bar, this third bar now, I want to just target 50% of the range and I'm out. I don't want to hold it up onto this place because I'm counter trading. But like I said, there are some other things I consider that is making me to hold it up to this very point. So I'm taking this trade on what is it called, on my paper trading account. Okay, that is just what I wanted to share with you, and I believe this is going to be very helpful. Now I don't know if you can see that all my higher time PDRAs are marked. You understand? So you need to follow the rule closely. This video might not be clear to you at first. If you need to go through this video again, see the lesson again, fine, that's beautiful. It's a learning process. That will be very, very helpful. Okay, now please remember to like, share, subscribe, and also partake in our trading scheme. That's our mentorship for the year 2025. And see you next time. Comment below, ask your questions, and have a nice time. So thank you.